What's up YouTube? It's Louis here bringing you today's cryptocurrency video on Bitcoin. What went on yesterday? We lost that golden ratio, the golden ratio, the 0.618 and the 0.50. Sorry, the golden pocket, I mean. And yeah, of course that's obviously negative. It means that we're creating a reversal wave with a technical target at the 1. Once you lose the 0.618, back test it as resistance. You haven't done that yet, but once you lost that, it's basically a sign that you're potentially creating a reversal wave. A lot of the time when you do this, come to that 786 and then get rejected. This is what I was anticipating on Twitter yesterday. I said if Bitcoin fails to get back above this pink line, we will continue to 42k. And what did we do? We met 42k, $42,382. So wouldn't say target is exactly met. Yes, we're in that 42k range. Yes, we're now bouncing off this support. But if we were to roll over some more, I'd expect a little relief rally before one last push down to the 1. This is what we've been talking about since over here. I said that when we were looking at the higher time frames, like the daily time frames. Let's go. What's up, Lucky? So you have wicks down here, we filled them in. So this is a scenario that I've been talking about for over a month now. So if nothing that's happening now is like unexpected, you know what I mean? We've been preparing for both scenarios. We were like, if we lose this, we're creating a reversal wave to fill in that wick, but it doesn't have to happen as long as this holds. It failed to hold, so the wick is now being filled in. So it's all making sense. It's nothing out of the ordinary. Just like this wick was filled, how we've gone through this in the past. Every wick is filled basically. Over here, massive wicks down here. What else? Wicks down here. Not every single time does it fill it 100% of that wick, but it will fill it like 75% of it. No one has the exact number, but yeah, roughly about there. So we've almost 100% filled it in, well over 50%, and definitely probably like 80-90% filled in. So if we were to expect a further dump, that is where I think it would go to. We are still outside of this resistance. You broke out here, back tested as support, but this is not enough of a back test of support. You want to see it arch away from the chart and eventually come back to it. You missed it here. You did bounce off the 0.618, had a little relief rally, couldn't get above the 382, which was our like double bottom necklines, failed to break above them, and that's why we see that rollover, lost the support over here. Now you create that reversal wave minimal to the 1. Now that's why I'm expecting a further dump. Of course, if you get back above that 786 confirm it support, that's why you won't come to the 1. But yeah, 41, basically 42k is our target, a little wick down. However, yes, we're expecting this double bottom scenario we've been talking about for over a month. But if you were to now lose this low over here, then we do have these further targets to the downside. Of course, when we broke out of this ascending triangle, we were expecting a break to the upside above 51.8, 52, but you broke downwards, and so you moved that measured move from here to here to the breakout over here. And that's now there, and your target for that, which you're technically in, is 1414 at 38/39k, and this is why we've been talking about 39k, and I think that would be filling in this wick, yeah, exactly down here. So because a lot of people are expecting this, anticipating it, waiting for it with buy orders, it might not come, but it may come. What we do want is that double bottom on that 1 that we've been talking about. So we must see that, because obviously we're between resistance and support ranging. What should have happened when we made this new swing high up here is we should have fallen back and held this as support, this previous swing high as support. But when you lose that, you come to the swing low down here. So this is why we've come down lower. We lost that support, we back tested it as resistance, and we're now falling to the range lows. So we're stuck in this range between 42 and 50k basically. And that's why we're just going sideways, chip chop sideways. And this is what we've been saying on the weekly time frame. So if I remove all the drawings, we've been saying here, we had this bullish engulfing, and last week, the end of it, we almost closed lower. We closed a bit above, invalidating this bearish engulfing. But I also did say to you guys that because we are technically at the top of a consolidation range, which is the 20 and the 55, it would be right in saying, because you haven't closed above this, you would come down and test the lows again. This just makes sense. Now, we do have 3.5 days of the weekly candle left, so obviously no one knows how this candle is going to print. It could finish like this, could be up here for all we know, it could be all the way down here for all we know. Like in the past, just like this candle over here, it was red all the way down to here, then had massive wicks up. This is what we want to see. If you do close below, like right now, it's not convincing enough break below for me, like just like this one. You broke below, but it's not convincing. It wasn't like a massive break above it, basically. And this is what you really need to see. Like, that's a convincing break over here. This green candle over here. This is not a convincing break, just like this isn't and this isn't. So maybe we do close outside. Maybe we do. So next week, if it were to close like this, next week it has all the work to do. Maybe a little wick down again. Fill in this wick down here, 38, 39K, which we're talking about. And then obviously close above here. Again, this could all happen in this next 3 days where we come down to here and wick back up. But basically, we want an unconvincing break below, or we need to close above. So unconvincing like this, but it needs to close back above. If it does close below this week, then the next week it has to close above. Otherwise, there's a higher risk you come down, lose it, and then obviously back test it as resistance, and that would take us back to 28K. And that's, of course, nasty. Putting in weekly lower lows, I guess monthly lower lows as well. Yeah, so we've got 25 days of the month left. We know where the 20 is for continuation of the bull market, 37, roughly 37K. Get the 12 EMA out. We've got the 12 EMA sitting nicely right now at 43,800. So really we want to close above that on the monthly time frame, because a lot of the time when you do come down, close over here, it's a higher chance that you come back up to that 12 and get rejected. So that would be your bear market. So over on the weekly, the 12 and the 20 haven't formed a bearish cross yet. There's still a chance of the EMA repel. So of course what that means is sends you in a slingshot motion upwards. So guys, that is the analysis for today. Once we get this bottoming out structure, like we just need to see it play out a bit more, like start creeping back up above those Fibonacci's. So we already had this original fib level. I want to see if I still have the other one. No, I don't. So we did have one earlier on in like maybe last week. We had this fib also from here to here, swing low to swing high, and we wanted that 618 to hold. We lost it. We were expecting to get back above it, and we couldn't, and that's why we placed this larger fibs. So you lost the 1, of course, and you're on your way to the 1618. So that's why we're saying that we're still coming into this 1 and now this 1618. So basically filling in that wick completely. So expect a relief rally and a further drop. Perfect, guys. I hope you enjoyed this video. I'll catch you in the next one, and as always, peace.